Right. We'll discuss question number 12. Question number 12. We'll discuss question number 12. We'll try to discuss all the questions related to chapter 5 within 2 days or 3 days. We'll try to complete. We'll try to complete. Right. Then go to question number 12. Go to question 12. Quickly draw profit and loss statement and statement of financial position for the question number 12. For the question number 12, profit and loss statement and statement of financial position. Quickly draw profit and loss statement and statement of financial position for the question number 12. For the question number 12. Right. Right. Here, write down profit and loss statement for the end of 31st December 2023. Right. Write down here profit and loss statement for the year ended 31st December 2023. Right. Later we will discuss the method of writing name of the user and everything. Right. Therefore, for now, just write down profit and loss statement for the 31st December 2023. Profit and loss statement. Right. And then find out here sales, and then minus cost of sales. Already we have discussed cost of sales. Students, step by step discuss the method of preparing profit and loss statement and statement of financial position. Therefore, if you have missed some of the lessons, please collect videos. Okay, please send a message to me and then I will send you the videos of the previous videos. Therefore, try to get the idea. Okay, referring those videos. If you don't have any idea regarding profit and loss statement, by then here sales, minus cost of sales, and then opening stock. Opening stock. I did the opening stock we can sell in this financial year. Opening stock we can sell, and then purchases, and then here leave at least 2 or 3 lines, and then write down here minus closing stock. Closing stock minus, right, and then here gross profit of the business, gross profit. Right, and after gross profit, write down other income. Other income, and then leave at least 2 lines. And then write down expenses. How to classify expenses? How to classify distribution expenses, and then administration expenses, and finance expenses. These are the types of expenses in the business organization. Okay, these are the different type of expenses. Okay, distribution, administration, and finance expenses. And then quickly draw statement of financial position. Statement of financial position. It also requires 3 lines. The statement of financial position. The statement of financial position requires 3 lines. Statement of financial position requires 3 lines. And then here write down statement of financial position. Statement of financial position as at 31st December 2023. The statement of financial position as at December 2023. Statement of financial position as at 31st December 2023. And then here, first line cost. First line cost. First line cost. And then second line accumulated depreciation. Last time we discussed accumulated depreciation cost, accumulated depreciation, and then this one carrying value. CV means carrying value, carrying value. Cost, accumulated depreciation, carrying value. These three headings applicable only for fixed assets. Only for fixed assets. It means only for land, building, motor vehicle, okay, that kind of fixed assets. Right. And then here, non-current assets. Non-current assets. Leave at least 4 or 5 lines. And then here write down current assets. Current assets. Current assets. And then leave at least 5 or 6 lines. And then here write down equity and liability. Equity and liability. And then non-current liability and current liability. Right. Equal. Quickly draw profit and loss statement and statement of financial position. We draw profit statement and statement of financial position. Right. Shall we start the question? Shall we start? Question, shall we start?
Okay.
Okay, right. Labdil, shall we start?
Okay, sir.
Okay, right. Ramisha, okay, shall we start? Ramisha.
Okay, sir.
Okay, right. Lenora, okay.
Okay, sir.
Okay, right. Right, then look at the question number 12. Get the logical understanding. Right. Look at the question number 12. Look at the question number 12. Trial balance as of 31st December 2023. Right. Trial balance as at 31st December 2012. Right. This is the trial balance. And then additional information. And then additional information. What are the additional information? Here we have 2 additional informations. Here we have 2 additional informations. Closing stock as of 31st December 2023, 12,000. Closing stock. Closing stock adjustment. Then you need to deduct closing stock from the cost of sales. Okay, now when you calculating cost of sales, you need to deduct cost of sales. You need to deduct closing stock, and then this closing stock should be transferred to statement of financial position. Under assets, you need to write down. Right, then here closing stock 12,000. Write down closing stock 12,000, and then under the current assets, write down. Just write down closing stock. Closing stock or stock, no issue. Stock, just write down stock. Then here 12,000. closing stock adjustment already we have discussed. And then here from cost of sales minus 12,000 and then transfer that amount to statement of financial position. Closing stock 12,000. Closing stock 12,000. Done. Okay, then right. And then look at the second one. Rent expense payable, accrued rent expense is 3,000. Rent expense payable 3,000. The already paid amount of rent. How much the already paid amount? Akshaya, how much the already paid rent expense? Yes, already paid amount how much, Akshaya?
Sir, 4,000.
Yes, 4,000. Yes, 4,000. Right there in the trial balance, you can see already paid rent expense. Then here, rent account, rent expense. Rent expense. In here, rent expense debit 4,000 cash. Cash. This already paid amount available in the trial balance. This already paid and past double entry. Okay, that amount is available in the trial balance. Okay, for this 4,000, the business has passed double entries. Therefore, no need to worry about that 4,000. They have properly passed double entries. But here, rent expense payable, accrued rent expense 3,000. Another 3,000 is relevant for the current financial year. Another 3,000 is relevant for the financial year. We have discussed accrual concept. Based on the accrual concept, relevant expense for the period should be charged to profit. Be paid in cash or not. Accrual concept. Profit and loss statement is accrual concept. Then already paid amount 4,000, another 3,000 payable, another 3,000 relevant for the financial year. Then that's rent expense account debit. We need to increase rent expense by another 3,000. We increase our rent expense by 3,000, and then rent expense account debit, and then what? And then accrued rent account. Accrued rent account credit 3,000. Accrued rent means what? Rent payable. Accrued rent means what? Rent payable. Rent payable. Rent payable. Okay, then the payable amount 3,000. For this 4,000, no need to pass double entries. But for all the additional information, we need to pass double entry. Then for this 3,000, we need to pass double entry. This is the double entry. Rent expense account debit 3,000. Accrued rent account credit 3,000. That is the double entry for the rent payable, accrued rent expense. Right now, total rent expense for the period, how much? Total rent expense for the period, how much? 7,000. Total rent expense for the period, 7,000. Then 7,000 transferred to profit and loss statement. Into the profit and loss statement, we need to charge relevant amount for the period. Relevant amount for the period. Then this 7,000 relevant rent expense for the period. Then under the administration expense, write down rent. Just write down rent 7,000. Rent expense 7,000. Write down under administration expense. Write down on administration expense, rent expense 7,000. 7,000. Right, and then this 3,000 payable. This 3,000 payable. This 3,000 payable. Approved rent expense. 3,000 payable. Then this 3,000 should be recorded. What should be recorded under current liability? Under the current liability, you need to record this accrued rent payable amount. Short-term liability. Then under current liability, first column First row you need to allocate for the creditors. First column for the creditors and second column after second column after allocating first column first row for the creditors and after that you can write down other payable balances. Okay, after allocating first row for the creditors, you can write down other payable in the other column liability. Then here write down accrued rent. Accrued rent, how much? 3,000. Accrued rent, how much? 3,000. Okay, right here. After the creditors, you can write down other payable balances in current liability. Then here, accrued how much? 3,000. Accrued rent 3,000. Right. Tell me, is it clear? Tell me.
Clear, sir.
Clear. Inosh, clear? Inosh?
Clear, sir.
Very right. Imira, clear? Imira.
Clear, sir.
Clear? Right. Right. Then students, in question number 12, all the additional information done. Closing stock, okay. Rent expense payable, okay. Done. Finished. I think now we will move into trial balance. Trial balance. Go to the trial balance. Right. Go to the trial balance. Sales period, how much? 125,000 total sales. Total sales 125,000. Total sales 125,000. Total purchases under the cost of sales, how much? 46,000. Under the cost of sales, write down 46,000. Total purchases 46,000. Opening stock 12,000. Opening stock 12,000. Under the cost of sales. Under the cost of sales, write down opening stock 12,000. Opening stock 12,000. Right. Carriage inward 3,000. Purchases plus carriage inward. Carriage inward. Purchases plus 3,000. Carriage inward purchases plus. Loading, unloading expenses 1,000. Loading and unloading expenses 1,000. Loading, unloading expenses 1,000. Loading, unloading expenses 1,000. Purchases plus. Loading, unloading expenses 1,000. Purchases plus. Purchases plus. Right. Rent expense done. Rent expense done. Advertising expense 5,000 under the distribution expense. Under selling and distribution expense. Okay, right there, the advertising expense under selling and distribution. Under distribution expense, right down. Advertising 5,000. Advertising 5,000. Advertising 5,000. Advertising 5,000. Right, and then buildings record under non-current assets. Building under non-current assets in the cost column. Write down. Write down. Building model land. At first we will write down land. Building. Motor vehicle. Land, building, motor vehicle. Then building 62,000, right, first line. Building 62,000. Motor vehicle 40,000. Motor vehicle 40,000. Motor vehicle. Land 65,000. Land 65,000. Land, building, motor vehicle. Non-current assets. Land, building, motor vehicle. Okay, then right. And then salary expense 8,000. Salary expense under administration expense. Salary expense. Write down under administration expense. Salary. Salary under administration expense 8,000. Salary is under administration expense 8,000. Salary is 8,000. And then fixed deposit interest 3,000. Look at fixed deposit interest received amount. This 3,000 means fixed deposit interest received amount. Okay, this 3,000 means fixed deposit interest received amount. Okay, 3,000. If the interest 3,000. FD interest account 3,000 credit. 3,000 credit. Received amount in cash. Fixed deposit interest 3,000 received amount in cash. But look at the total fixed deposit of the business, how much? 40,000. Total fixed deposit of the business, how much? 40,000. Then at first write down fixed deposit under the non-current assets. Under the other assets, here write down fixed deposit. Here you will allocate spaces. The board is not enough. Write down fixed deposit. Fixed deposit 40,000. Fixed deposit 40,000. Fixed deposit 40,000. Fixed deposit 40,000. Okay, the fixed deposit 40,000. And then here, how the fixed deposit interest for the period? How much the fixed deposit interest for the period? 40,000 into 10%. 40,000 into 10% is the fixed deposit interest for the period. Relevant fixed deposit interest for the period. 40,000 into 10%. Then how much? 40,000 into 10% means 4,000. 4,000 10% means how much? How much? 4,000. 4,000. Relevant fixed deposit interest for the period, how much? 4,000. Up to now, collected amount, how much? 3,000. Up to now, collected amount 3,000. But relevant amount for the period, how much? 4,000. It means collected amount 3,000. It means another 1,000 need to collect. Another 1,000 need to collect. Right here, another 1,000 need to collect. Then that, on the other hand, that 1,000 is an income of the business. Income. Okay, fixed deposit interest received amount 3,000, but another 1,000 receivable, as well as that 1,000 income of the business. So then, fixed deposit interest account credit 1,000. Fixed deposit interest account credit 1,000. FD interest receivable account. FD interest receivable account. Receivable account debit 1,000. FD interest account credit 1,000. FD interest receivable account debit 1,000. That 1,000 income. Therefore, FD interest account credit. And then interest receivable account. Receivable account debit 1,000. Okay, right then here. Total fixed deposit interest income for the period, how much? 4,000. Total fixed deposit interest for the period, how much? 4,000. The relevant fixed deposit interest for the period. The relevant fixed deposit interest for the period, how much? 4,000. Then the relevant amount should be recorded under other income write down. Other income write down. Fixed deposit interest. Fixed deposit interest under other income. 4,000. The second column. This is the first column, second column, third column. Then in the second column, write down FD interest 4,000. FD interest 4,000. FD interest 4,000. FD interest 4,000. And then this FD interest for 1,000 receivable need to collect in future. This 1,000 need to collect in future. Then this 1,000 should be recorded under the current assets. You need to write down this FD interest receivable amount. Then under current assets, in the first row, you write down closing stock, and after that debtors. And after that, you need to write down debtors. After the debtors, you can record FD interest receivable. FD interest receivable. FD interest receivable. How much? FD interest receivable 1,000. FD interest receivable 1,000. FD interest receivable 1,000. Okay, FD interest receivable account, write the amount under the current assets. Under the current asset. Under the current asset. Right. Sanjali is here. Sanjali. Hasidu clear. Hasidu.
Yes, sir.
Yes, right. 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 FD interest okay done. Right. Then again go to the trial balance. Fixed deposit interest 3,000. FD 10%, 40,000, right? 40,000. Okay, done. Interest expense 4,000. Interest expense 4,000. Interest expense 4,000. It means already paid interest expense. Bank loan interest is how much? 4,000. Already paid bank loan interest 4,000. Already paid bank loan interest 4,000. Bank loan interest already paid amount 4,000. Already paid amount in cash 4,000. How about the bank loan? How about the bank loan? Bank loan amount of the business is how much? 40,000. Bank loan amount of the business is 45,000. Then 45,000 into 20%. 20%. How much? 45,000 into 20%. How much? 9,000. 9,000. Relevant bank loan interest for the period how much? 9,000. Relevant bank loan interest for the period how much? 9,000. Out of that 9,000, 4,000 paid in cash. Balance 5,000 payable. Balance 5,000 payable. Then how to record double entry for that balance 5,000? How to record double entry? Bank loan interest account debit 5,000. Bank loan interest account debit 5,000. Accrued bank loan interest. Accrued bank loan interest account credit 5,000. That's a double entry for the accrued bank loan interest. For the balance payable. For the balance payable bank loan interest. Then here, bank loan interest account debit 5,000. Accrued bank loan interest account credit 5,000. Accrued bank loan interest. It means bank loan interest payable. That 5,000 payable. Okay, right. Right. Then now, relevant bank loan interest for the period how much? 9,000. Relevant bank loan interest for the period is how much? 9,000. Then 9,000 record under the finance expense. Under the finance expense, write down bank loan interest. Bank loan interest under finance expense. Bank loan interest. Bank loan interest under finance expense 9,000. Under the finance expense, bank loan interest 9,000. Bank loan interest 9,000. And then this 5,000 payable. This 5,000 payable. This 5,000 payable. Then this 5,000 should be recorded under current liability. Under current liability, write down that 5,000. Accrued bank loan interest. Accrued bank loan interest 5,000. Accrued bank loan interest 5,000. This 5,000 payable. Then this 5,000 should be recorded under current liability. Accrued bank loan interest 5,000. Accrued bank loan interest 5,000. Right. Clear? Is it clear? Inosh, is it clear, Inosh?
Yes, sir.
Clear, right? Imira, is it clear? Imira?
Yes,
Clear,
sir.
right? Akshay, clear. Right. Then, then go to the balance. Interest is 4,000, okay, done. Electricity expense 2,000, record under administration expense. Electricity expense. Electricity expense and administration expense 2,000. Electricity expense 2,000. Debtors 12,000. Debtors 12,000. Current assets. Debtors 12,000. Current assets. Debtors. Creditors or trade payable. Another name is trade payable. Creditors 6,000. Creditors 6,000. Creditors 6,000. And then 20% bank loan 45,000. Non-current liability. Bank loan 45,000. Bank loan. Bank loan 45,000. Bank loan. Capital 125,000. Capital. Capital 125,000. Capital 125,000. Done. Right. Finish. Okay. Quickly balance of the question. 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 Balance of the question. Here. Stock to be sold. Here this amount is called stock to be sold. Opening stock plus purchases. Opening stock plus purchases plus carriage inward plus loading and expenses. Right? Then the closing balance. Right? The technical term for this closing balance is stock to be sold. Okay, the cost of goods to be sold. Stocks presented for the sale. I did it. Here the total amount is called. Here the total value is called stock presented for the sale. And out of that presented amount, remaining stock 12,000. Remaining stock 12,000. Then after deducting 12,000 closing stock, you can calculate cost of sales. You can calculate what? Cost of sales. Cost related to sales. Cost of sales. Okay, guys, then here we calculate cost cost of goods to be sold. How much? Cost of goods to be sold, how much? $50,000, 62,000. My space is not enough. Here it is 62,000 now. 62,000. $62,000 now. Right, and then from the 62,000, you need to deduct closing stock. Then how much the cost of sales? Cost of sales, how much? Cost of sales 50,000. Cost of sales 50,000. Right, and then, right, and now sales minus cost of sales. Sales minus cost of sales, you can calculate gross profit. You can calculate gross profit. How much the gross profit? How much the gross profit? 75,000. 75,000. Right, and now plus other income. Plus other income. 79,000. 79,000. And then distribution expenses 5,000 plus administration expense 17,000. Finance expense 9,000. Take the total expenses. Take the total expenses. How much total expenses? $31,000. Is it correct? Total expenses 31,000. For the period, how much profit of the period? $48,000. Net profit. Net profit 48,000 net profit. Capital plus net profit. Right, and then quickly balance of statement of financial position. And you can balance of statement of financial position. Right then. Here, $67,000. 65,000. 62,000. 40,000. 40,000. 167,000. Right. If you balance the question, send me the answers. Quickly send me the answers. If you balance the question, balance the question and send me the answers. Right, 13 homework. Right. 13 homework. Right. Now we will move into question number 14. Question number 14. We'll move into question number 14. Right. Right. Then before moving to question number 14, we will discuss today one of the important concepts that is called depreciation. We will discuss depreciation today. We will discuss depreciation today. Okay, question number 13 homework. Everyone needs to send me homework. Huh? So question 13. Right now we will discuss depreciation. Right, we will discuss depreciation. Right, please write down a small heading, depreciation. Please write down the depreciation. 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 Right. Write down depreciation. Depreciation. Right. Around depreciation, and then we'll start depreciation here. Right. Then depreciation means what? Depreciation means a business organization use long-term assets. For example, fixed assets, buildings, motor vehicle, tools, equipment, machines. The kind of long-term assets. Long-term assets. Fixed assets are used for the operational activities. This organization use fixed assets, long-term assets for their operational activities. Operational activities, and then when they use those fixed assets for operational activities, their value of the fixed assets, can be reduced. Value of those fixed assets can be reduced. Okay, then when they're using their fixed assets for business activities. For example, when a business uses a vehicle for the operational activities, value of the vehicle getting decreased. Then that reduction in value, of the fixed assets should be considered as depreciation. Reduction in value of the fixed asset should be considered as depreciation. Okay, when a business organization is using their building for business activities, the value of the building getting decreased day by day. So the reduction in value of the building can be considered as depreciation. Can be considered as what? Can be considered as depreciation. Reduction in value can be considered as depreciation. Okay. Reduction in value can be considered as a depreciation. Can be considered as depreciation. But we don't have a specific method. We don't have a universally recognized specific method to calculate reduction in market value. We don't have a specific method. A business doesn't have a specific method. Therefore, the actual value that decreased because of the operational activities cannot be measured properly. The reduction in value cannot be measured properly. There is no specific method to calculate reduction in market value. Reduction in value. Therefore, we use a simple method. Therefore, we use a simple method. We'll discuss. Therefore, we need to use some simple method. Simple method to calculate depreciation. Okay, it is not a complex discussion. Okay, okay, using some simple method, we can calculate annual depreciation. Annual depreciation. Okay, reduction in value of the fixed asset. Annual depreciation. We'll discuss. We'll discuss. Right. Let's say like this. Let's say Emira. Let's say Emira has a business. Emira has a business. Okay. Emira has a business. Then Emira purchase a motor vehicle for his business. Emira purchase a motor vehicle for his business. Motor vehicle. Let's say value of the motor vehicle is 80,000. Let's say value of the motor vehicle is how much? 80,000. Value of the motor vehicle is 80,000. Then start with the logical idea. No need to cram anything. Start with the real idea. I will give you the real idea. No need to cram anything, huh? Right. Immediate purchase 8,000 worth of motor vehicle. 8,000 motor vehicle. Then this motor vehicle, finally, this motor vehicle, one of the non-current assets. One of the non-current assets, yes. One of the non-current assets. It means long-term assets. One of the fixed asset. Okay, purchase of motor vehicle for the business means purchase of one of the non-current assets. Long-term assets. Fixed asset. Purchase of a fixed asset. Okay, purchase of a fixed asset. On the other hand, the purchase of motor vehicle, purchase of motor vehicle can be considered as one of the long-term expense. 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 Let's say like this. Let's say Emira can use this motor vehicle over 4 years. Over 4 years. Then this 80,000 is spent by Emira to get benefit over 4 years. To use over 4 years, Emira purchases motor vehicle. Long-term expense. Expense incurred for 4 years. Incurred, right now the expense incurred for 4 years. Long-term expense. Okay, and then here purchase of a motor vehicle can be considered as a long non-current assets. Can be considered as fixed asset. Purchase of a fixed asset. On the other hand, we can consider this purchase of motor vehicle as one of the long-term expense. Long-term expense. It is not a short-term expense. It is a long-term expense. And when we use this motor vehicle for the business activities, the value of the motor vehicle getting decreased. But we don't have a proper method to calculate that reduction in value. Reduction in value. Okay, and on the other hand, this 80,000, one of the long-term expense. Expense incurred for 4 years. For example, expense incurred for 4 years. Over 4 years, we can get benefit. We can use this motor vehicle for business activities. For business activities. Then we don't have a proper method to calculate depreciation. Okay. We don't have a proper method to calculate reduction in market value. Therefore, we can depreciate this motor vehicle. Or therefore, this long-term expense of the business, organization, we need to allocate for 4 years as expense of the business organization. Long-term expense is how much? 80,000. Long-term expense is 80,000. And then this 80,000 motor vehicle we can use over 4 years. So then we can calculate annual depreciation like yes, we can calculate annual depreciation like this. Total cost of the motor vehicle 80,000. Total cost of the motor vehicle 80,000. Then 80,000 divided by number of years that we expect to use this motor vehicle. Number of years that we expect to use this motor vehicle. How many years? 4 years. 4 years. Then this long-term expense we divide by 4 and then this 20,000 we can consider as annual motor vehicle expense or annual depreciation of the motor vehicle. Annual depreciation of the motor vehicle. Annual expense of the motor vehicle. One of the long-term expense here, long-term expense is around 80,000. This 80,000 incurred for 4 years. We can get benefit. We can get benefit over 4 years. Okay, over 4 years from this motor vehicle. Then divide motor vehicle cost. Divide motor vehicle cost by 4 years. Okay, divide by 4. Then you can calculate annual motor vehicle expense. Annual motor vehicle expense. Annual motor vehicle expense. Annual motor vehicle expense. It means annual depreciation. Annual depreciation. Annual depreciation. Annual reduction in value of the motor vehicle. 20,000. Annual depreciation. Annual motor vehicle expense. Annual motor vehicle expense. Okay, total expense 80,000. Total expense 80,000. And then here, this total expense we divide by 4 years. We expect to use this motor vehicle for 4 years. Therefore, annual expense 80,000 we divided by 4. Then annually 20,000 we can recognize as motor vehicle depreciation. Motor vehicle depreciation. Motor vehicle expense. That's a motor vehicle expense. But the technical term for that 20,000, that motor vehicle expense is how much? The technical term is what? Technical term is motor vehicle depreciation. Motor vehicle depreciation. Okay, we incurred this 80,000 for 4 years. Therefore, we need to divide this 80,000 by 4 years to calculate annual expense related to motor vehicle. Annual expense related to motor vehicle. Okay, long-term expense like that. Long-term expense divided by number of years. Then students, this 8,000 is called cost of the motor vehicle. This 80,000 is called cost of the motor vehicle. This 4 years, right there. Then this 4 years is called useful lifetime. Useful lifetime. Useful lifetime. Useful lifetime of the motor vehicle, how much? 4 years. Right then, how many years? Useful lifetime of the motor vehicle, 4 years. How many years? 4 years. Then total value of the motor vehicle 80,000. 80,000. Then cost divided by useful lifetime. Cost divided by useful lifetime. Then we can calculate annual depreciation of the motor vehicle. Annual reduction in value of the motor vehicle 20,000. 20,000. And after that, and then this 20,000, and then this 20,000, we need to recognize under decision expense as motor vehicle depreciation. Motor vehicle depreciation. Motor vehicle depreciation. Okay, this 20,000 we need to recognize as motor vehicle depreciation. Motor vehicle depreciation. Okay, let's say when you calculating 2023 profit of the business, under distribution expense, you will write down motor vehicle depreciation as 20,000. Motor vehicle depreciation as 20,000. One of the expense, another expense of the business. Motor vehicle depreciation. Tell me clear. Tell me.
Clear, sir.
Clear. Then Ramesha, clear. Ramesha,
Clear, sir.
clear. Lenora, clear.
Yes, sir.
Lavdil,
Clear, sir.
clear. Right. Right. Inosh, okay. Inosh, clear.
Yes, sir.
Then right. Then another point. Here. Let's say like this. Let's say then this business belongs to Emira, right? This business belongs to Emira. Emira purchased a motor vehicle. Value of the motor vehicle is 80,000. Then how to calculate annual depreciation? Cost divided by useful lifetime. Then annual depreciation 20,000. Let's say like this. Let's say to purchase this motor vehicle. Today, Emira paid today 80,000. Emira paid today in cash. How much? 80,000. Today total payment 80,000. But let's say like this. Let's say after 4 years. Emira can sell the remaining motor vehicle. Let's say after 4 years, Emira can sell the remaining motor vehicle for 20,000. Emira can sell after 4 years this motor vehicle. Emira can sell for 20,000. Today, Emira's total expense is how much? 80,000. Today, total expense is 8,000. But after 4 years, Emira can recover 20,000 from this motor vehicle. After selling the motor vehicle, okay, Emira used this motor vehicle over 4 years. Then after 2 years, after getting maximum benefit from the motor vehicle, Emira sell this motor vehicle for 20,000. Then how much the actual expense of Emira? How much the actual expense of Emira? Akshaya. Austin, how much? Austin. Hasidu, how much? Hasidu. Emira. Ramisha.
60,000.
Yes, 60,000. Yes, correct. 60,000. Today, Emira paid 80,000 to purchase this motor vehicle. But after getting maximum benefit from this motor vehicle, right there, at the end of the fourth year, Emira can sell this motor vehicle for 20,000. 20,000. Already we discussed. But the purchase of vehicle is one of the long-term expense. Long-term expense. Today expense is 80,000, but after 4 years, you can recover 20,000. Then actual expense is how much? 60,000. Actual expense is 60,000. Then when you calculating annual depreciation, right? Then here, when you calculating annual depreciation related to this motor vehicle, right? Then actual expense is how much? 60,000. Then 60,000 divided by 4. 60,000 divided by 4. In this business, when you calculating annual depreciation, annual motor vehicle expense, from the cost you need to deduct. The sales price after the useful lifetime. The sales price after the useful lifetime. Then actual expense is 60,000. Then 60,000 divided by 4. 60,000 divided by 4. Okay, next 6,000 divided by 4. And then here, what is the technical term for this 20,000? What's the technical term? The technical term related to this 20,000 is, scrap value. Scrap value. Cost minus scrap value. After 4 years, if you can sell this motor vehicle for 20,000, then the technical term for that 20,000 is scrap value. Or another term is there, residual amount. Residual value. Cost minus residual value. Or scrap value. Residual value means remaining value, residual value, or scrap value. That's a technical term. Then how to calculate annual depreciation? Cost minus scrap value divided by useful lifetime. Then you can calculate annual depreciation. Okay, right here 8,000 minus 20,000 divided by 4. Annual depreciation. Or here 8,000 minus 20,000 means 60,000. 60,000 divided by 4. How much? 15,000. Then annual depreciation of how much? 15,000. Annual depreciation 15,000. Annual depreciation 15,000. Lamai, here the technical term for this 60,000 is depreciable amount. Depreciable amount. Cost minus scrap value, it is called depreciable amount. Then depreciable amount divided by 4, or cost minus scrap value divided by same answer, same thing. The technical term for the 60,000 is depreciable amount that can be depreciated, amount that can be charged over 4 years. Over 4 years, you can charge this 60,000 to profit and loss. Over 4 years, over 4 years, this 60,000 you can charge profit and loss. 15,000, 15,000, 50,000, 15,000. Okay, right. Okay, clear. Akshaya, is it clear? Akshaya.
Yes, sir.
Yes. Austin clear?
Yes, sir.
Hasinu clear?
Yes, sir.
Tiny hurry. Okay, then clear, right. Then students, we'll take 10 minutes break. Okay, after 10 minutes, we will discuss the we'll discuss the precision again, na? Okay, then we will do few questions, huh? We'll do few questions. We'll take 10 minutes break. Now time is 9:25. Again, we'll start at 9:35. 9:35. Huh? Take 10 minutes break. 10 minutes break, huh? Right. Right. Please go to page number 15. Page number 15 of the team. Please go to page number 15 of the team. Page number 15. Page number 15 of the team. Go to page 15 of the team. By page 15. In page 15, you can see depreciation, a separate note. A separate note for depreciation. Some of the questions. Question number 1, 2, 3. Related to depreciation. Related to depreciation. Right. Right. We will do question number 1 at first. No need to do second one and third one. Please cut second one and third one. No need second and third. No need second and third. Prepare, it means prepare motor vehicle account and show the extraction of profit and loss. No need, no need. We'll do only first one. First point of question number 1. Page number 15, now page number 15. Right here, question number 1. Question number 1. Mr. Pereira purchased a motor vehicle for 60,000. Useful lifetime is 4 years. Useful lifetime is 4 years. Calculate annual depreciation. Right. Quickly calculate annual depreciation for the question number 1. Write down question number 1, page number 15. Huh? Page 15. Page 15, question number 1. Right. Quickly calculate annual depreciation. How to calculate annual depreciation? Annual depreciation. Annual depreciation equal cost minus scrap value divide by useful lifetime. Divide by useful lifetime. divided by useful lifetime. How much the cost? Cost is 60,000. Cost is 60,000. Scrap value 0. Useful lifetime 4. Then annual depreciation 15,000. Annual depreciation 15,000. Annual depreciation 15,000. Okay, then clear. Finished. Inosh, is it okay, Inosh? Is it okay? Okay, right. Right. Ramesha, is it okay? Is it clear?
Yes, sir.
Yes, you're right. 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 Now we will move into question number 2. Right. I will move to question number 2. Tell me. Tell me, is it okay?
Okay, sir.
Right. Question number 2. Question number 2. Look at the question number 2. In the question number 2, first calculate the annual depreciation. Calculate the annual depreciation. For the question number 2, calculate annual depreciation. Question part 1. Annual depreciation. Annual depreciation. How to calculate annual depreciation? Cost minus इसका value divided by useful lifetime. Right. Cost 82,000. cost. इसका value or residual value 12,000. Divide by 4. Divide by 4. How much annual depreciation? How much annual depreciation? How much annual depreciation? How much? Right. Akshay, how much annual depreciation?
17,500.
Yes, 17,500. Yes, correct. Annual depreciation 17,500. Annual depreciation 17,500. Right. And then for the second write down, prepare the motor vehicle account and For the second one, write down. Prepare the motor vehicle account and depreciation expense account. Prepare the motor vehicle account and depreciation expense account. Depreciation expense account. Depreciation expense account. Prepare the motor vehicle account and depreciation expense account. Depreciation expense account. Right. Third one, calculate the annual net profit. Right. We will calculate. We will calculate. Right. Then prepare the motor vehicle account and depreciation expense account. Depreciation expense account. Right. We will prepare motor vehicle account at first. Motor vehicle account. Prepare motor vehicle account. Motor vehicle account. Write down. Motor vehicle account. Motor vehicle account. And then depreciation expense account. Depreciation expense account. Motor vehicle account. Depreciation expense account. Motor vehicle account and depreciation expense account. Ah. Okay, right. Okay, done it, right. Then here, right, then here, prepare the motor vehicle account and depreciation expense account. Prepare the motor vehicle account. Then here, in question number 2, Minol has purchased this motor vehicle for 82,000. Minol has purchased this motor vehicle for 82,000 in 2020 financial year. In the year 2020, he has purchased this motor vehicle for 82,000. Then, what is the double entry of this 82,000? What's the double entry? Cash book credit, motor vehicle account debit. Cash book credit, motor vehicle account debit. Purchase value of the motor vehicle. Purchase value of the motor vehicle. Cash book credit, motor vehicle account debit. Motor vehicle account debit. Motor vehicle account debit. Okay, the motor vehicle account debit. Right, quickly write down here. Cash 82,000. Cash 82,000. Right. Cash 82,000. And then now we will note annual depreciation. Reduction in value. Right there. Reduction in value of this motor vehicle. or annual depreciation. Long-term expense 82,000. Right here, the long-term expense 82,000. Then annually 17,500. We need to charge to profit and loss. When we calculate profit and loss of the business organization, we need to record motor vehicle depreciation as an expense. As an expense. Right, then here, then in the year, in first year, depreciation of how much? 17,500. Then how to pass double entry for that 17,500? Here, motor vehicle account credit 17,500. Motor vehicle account credit 17,500. Motor vehicle account credit 17,500. Depreciation expense. And then depreciation expense account debit 17,500. Motor vehicle. Annual finance in the year, in first year, depreciation of the motor vehicle. Motor vehicle account debit, depreciation is accounting. Depreciation expense accounting. Okay, that's clear. Is it clear? Akshaya, is it clear, Akshaya?
Yes, sir.
Clear, right? Right. And then now, right? And then now, this annual depreciation 17,500. We need to record in profit and loss statement. In profit and loss statement, this annual depreciation we need to record. This annual depreciation we need to record in profit and loss statement. Right? How to just write down like this. Okay, write down this 17,500. 17,500. And then here 17,500 profit and loss. Write down profit and loss. P&L, profit and loss. You transfer this 17,500 profit and loss. Depreciation expense of year one, of the year one. Right then, students, in my whiteboard, I don't know, therefore, we will do third one as well. Yeah, third one, calculate the annual profit. Calculate the annual profit. Right now, we will calculate the annual profit as well. We'll calculate annual profit as well. I will type on an Excel paper. Excel, right. We will do third one as well. Third one, calculate the annual profit. Calculate the annual profit. We will calculate annual profit. We will calculate annual profit. Right. Right. By that third point, ask for the third one. Third one, annual profit. Annual profit of the business organization. Quickly write down annual profit. Here, 2020, 2021, 2022, 2023. These are the years. And then write down sales of each year. Sales, write down sales, 98,000 sales, 82,000, 105,000, 115,000. Total sales. Total sales. right? And then sales minus cost of sales. Cost of sales. What are cost of sales items in this business? Purchases. Cost of sales, purchases. Cost of sales, purchases. Total purchases are can be considered as cost of sales. Then cost of sale 28,000, 31,000, 48,000, 67,000. Cost of sales. Sales minus cost of sales. Then here you can calculate gross profit. Gross profit. Gross profit. Gross profit. Sales minus cost of sales. Quickly write down this, huh? Gross profit. These are profits. Gross profit. And then expenses. Expenses. What are the expenses? Expenses. Salary. Salary. 5,000. 4,000. 8,000 and 7,000. Expenses. And after that, write down motor vehicle depreciation. Motor vehicle depreciation. Right. After completing this question, we will list for the we will complete this question and then we will list for the day. Question number 3 we will do on next Thursday. Right, is it finished? Okay, finished. Answer for the third block. And here, motor vehicle depreciation for the first year, how much? 70,000. Motor vehicle depreciation for the first year, 70,000. 70,000. Right, and then profit how much? And now the profit is calculate the profit. Calculate the profit. The year profit is the first profit is 7,500. 4,500 profit. Okay, they're done. Tell is okay. Okay. Amish, okay.
Yes.
Is it finished? Hashidu, okay, they're done.
Yeah.
Yes, right. Austin finished. Third finish. Austin. Lagdil finish.
Done, sir.
Done, right. Imira,
Done, sir.
Akshaya finish.
Yes, sir.
Yes, sir, right. 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 Then again go come to the ledger accounts. Again come to the ledger account. Then here first year is okay now. First year, right. Then now calculate the closing balance of the motor vehicle account. Calculate the motor vehicle account closing balance. Here 82,000, 82,000, 82,000, and then 82,000 minus 30,500. You can calculate closing balance at the end of the year one. Balance carried down. How much balance carried down of motor vehicle? How much? Balance carried down of motor vehicle, how much? $64,500. 64,500 balance carried down, and then here balance brought forward 64,500. 64,500 balance brought forward. Balance brought forward. $64,500. Right. Right. Okay, next done. Next, right. End of the year one, closing motor vehicle balance. Right. Then now we will move into second year. Second year. Second year. Record the second year depreciation. Second year depreciation. Motor vehicle account credit. Depreciation expense 17,500. Motor vehicle account credit. Depreciation expense account debit. Depreciation expense account debit 17,500. Motor vehicle. Second year depreciation. Second year depreciation. Second year depreciation. And then second year depreciation we need to transfer to the profit and loss statement. We need to transfer this second year depreciation to the profit and loss statement. 17,500. 17,500 and 17,500 profit and loss. Profit and loss. This second year motor vehicle depreciation transfer profit and loss. Transfer profit and loss. Second year profit and loss, transfer profit and loss. Second year depreciation, transfer profit and loss. Second year depreciation. Second year depreciation. Right. Then go to the third point. Third right near there. Then go to the profit and loss calculation. Okay. Go to third one. Third requirement. Third requirement of is calculating profit or loss. Then in the year 2021, annual depreciation 70,500. 70,500. In the year 2021, annual depreciation 70,500. Transfer to profit and loss. Then here calculate profit of the period. Calculate the profit of the period. Calculate the profit of the business organization. Profit is 29,500. Profit is 29,500. Profit is 29,500. Profit. Profit is 29,500. Right, finish. Finish. Profit is 29,500. Right, then come to the motor vehicle account. Come to motor vehicle account now. Motor vehicle account. Here 64,500. 64,500 minus 17,500. How about the closing balance? Closing balance of the motor vehicle. Closing balance of the motor vehicle account is how much? $47,000. 47,000. Yes, 47,000. Yes, 47,000. Balance carried down of the motor vehicle 47,000. Balance brought forward of the motor vehicle 47,000. Balance brought forward of the motor vehicle how much? 47,000. 47,000. Balance carried down 47,000. Balance brought forward 47,000. Balance brought forward 47,000. Right. Right. 47,000. Done. And then go to third year. Third year. Third year. Third year. Depreciation. Depreciation how much? 17,500. Third year. Motor vehicle account credit. Depreciation expense account debit 17,500. Motor vehicle. Motor vehicle account depreciation expense account debit. And then this 17,500 transfer profit and loss. 17,500 transfer profit and loss. Profit and loss. Profit and loss. Transfer profit and loss. Then calculate the profit of the third year. Calculate the profit of the third year. 70,500 transfer to third year. Year 2022. Go to the year 2022. Go to the year 2022. 2022. Depreciation 70,500. Depreciation 70,500. And after that, total profit how much? Total profit how much? Now the total profit 31,500. Total profit is 31,500. Total profit is 31,500. 31,500 total profit. Okay, next 5. Profit is 31,500. By then, come to the motor vehicle account. Go to the motor vehicle account. Motor vehicle account. Here, closing motor vehicle balance 47,000. 47,000. 47,000 minus 17,500. 47,000 minus 17,500. How much? Is it correct? Right. 29,500. Yes. Right. Then balance carried down. 29,500. Balance brought forward. 29,500. Right. 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 Closing motor vehicle balance 29,000. Right. Now record the depreciation of fourth year. Record fourth year depreciation. Record fourth year depreciation. Fourth year. Here fourth year depreciation 17,500. Depreciation 17,500. Motor vehicle account credit. Depreciation expense account debit. 17,500. Motor vehicle. And then this 17,500 transfer to where? Transfer to profit and loss. Profit and loss. This 17,500 transfer profit and loss. Profit and loss. Profit and loss. Then go to the profit and loss statement in fourth year. In fourth year. Calculate the profit. Calculate the profit. Calculate the profit. Calculate the profit. 17,500. Right. Profit of the fourth year. Profit of the fourth year. 23,500. Fourth year profit is 23,500. Fourth year profit is 23,500. Okay, fourth year profit is 23,000. Right. Then come to the motor vehicle account. Motor vehicle account. Right. Finish. Question is finished. Right. Then here, how much the closing balance of the motor vehicle account? Closing balance of the motor vehicle account, how much? Here, 29,500. 29,500. Then 29,500 minus 70,500. How much the remaining amount? Remaining balance how much? Remaining balance how much? Remaining balance? Remaining balance 12,000. Remaining balance of the motor vehicle account 12,000. What is this 12,000? Remaining balance of the motor vehicle account now how much? 12,000. What is this 12,000? What is this 12,000? This 12,000 is scrap value. This 12,000 is scrap value. Scrap value. Residual value. After useful lifetime, we can sell this motor vehicle for 12,000. We can sell this motor vehicle for 12,000. Scrap value 12,000. Here, remaining balance 12,000. Now you can sell this motor vehicle for 12,000. When you purchase this motor vehicle, you expected to sell this motor vehicle after 4 years for 12,000. Then this is at 12,000. Scrap value. Scrap value. Sale value at the end of the fourth year. Then what is the double entry of this 4,000 or 12,000? Cash book debit. You can sell it. You can sell cash book debit 12,000. Motor vehicle account credit 12,000. Motor vehicle account credit 12,000. Cash. Cash 12,000. Motor vehicle account credit 12,000 cash. Here write down. Write down here. Put an arrow and then write down in red pen. In red pen here write down scrap value. Scrap value, write down. Get the red pen, write down scrap value. Scrap value. Sale value at the end of the fourth year, 12,000. Sale value at the end of the fourth year. Right. Right. That is the end of question number 2. Question number 2 differentiation. Next week we'll discuss question number 3, and after that we can discuss, and after that we can discuss final questions. Final performance statement and statement of financial questions. Question number 14 onwards, all the questions are exam type questions. Exam type questions. We'll try to complete these questions at least within another 2 days or 3 days. And after completing these questions, after, yes, within 2 or 3 days, and after that, we'll discuss theoretical matters given in the textbook. Within 2 or 3 days, we will discuss everything included in the textbook, all the theoretical matters. Okay, and after discussing theoretical matters in textbook, chapter 4 and 5, yes, chapter 5, chapter 4 and 5 is over, right? Right, finished, right? And after that, we can discuss non-profit organization, cost of production, and balance 3 lessons. Okay, right. Anyway, we will try to complete grade 7 whole syllabus. October, September, October. End of the October, we will try to complete. End of the October, end of November, we complete grade 11 syllabus. And after that, we discuss papers. And after that, we can discuss papers. Okay, grade 11 papers, model papers as well as past papers. Okay, right then, question number 13 homework. Question number 13 homework. Complete the question number 13. We will discuss depreciation, third question, and after that, exam type questions. Okay, can be started, right? Will be started, right? Then we'll stop for the day. We'll stop for the day. Okay, good night. Good night. Good night.